Oh my God. What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a wonderful week so far. Now, Bitcoin did in fact put in a higher high, and the question is, if we are consolidating right here, is this actually going to continue an upwards trend, putting in another higher low for Bitcoin? We need to pay attention to the charts. I am going to go over some key levels. I also want to talk about yet another Bitcoin indicator that we've only ever seen flash 3 times before in Bitcoin's history. It just flashed again. Now, will history actually repeat? Currently, right now, you can see that we're still holding above this 200 weekly moving average, and this is very, very good. This is traditionally considered whether or not you're in a bull market or a bear market, although realistically, anything below a 20% move to the downside is also traditionally considered a bear market. Bitcoin is a little bit of a different animal, but nevertheless, are we finally having that bottom for Bitcoin that we've been waiting for? I want to talk about that. I also want to discuss some on-chain data related to what's happening with exchanges and tokens right now, and it could provide some clues as to what some of these bigger players are actually doing in the background. Also, of course, we did have Michael Saylor stepping down. Some people were freaking out about that. We will talk about that. Also, there were 2 crypto hacks this week. So guys, be very, very careful. We're going to go over that. I'll let you know exactly what's going on with that. But for the most part, today's just going to be a quick update video. I do have some stuff to do, so I'm going to get straight to the point. Stick around to the end. Hopefully, you find some value out of this. And if you do, drop a like, drop a comment. And if you're not subscribed, well, I don't make videos necessarily every day, but when I see something important, I do bring it to you. So slap on a like, and also make sure that you guys hit the bell notification, because even some people are telling me that they had it on and it started getting turned off. So YouTube has been quite a mess lately, but nevertheless, guys, let's start off with the obvious right here. We are back above this 200 weekly moving average, and you can see very, very good support for Bitcoin in the past. One of the most important legacy moving averages really in Bitcoin's history. And currently right now, although we did struggle underneath it, you could see that not only did we close above it last week, but also this week we came down, retested it, and actually bounced off of it. So if this is finally flipping this from resistance into support, this could mean big, big, big things ahead for Bitcoin. And I did say in my video from last week that I do think Bitcoin is going to go on a 2-month rally, and I explained why. If you don't remember, it had a lot to do with some of the macro factors and some of the actual indications we were getting on the chart. But nevertheless, guys, I still do believe that we could be looking for some very nice Bitcoin price action in the coming months. And you can see right here, we are still attempting to get back into this EMA ribbon. And actually, I still have this from the last time I had this pulled up. But you can see, obviously, getting back into this and getting above this green level right here has shown in the past that we often are finding that bottoming out area. Of course, you can see that the RSI is still sitting at around 43, and we have seen historically that we usually want to see the RSI get back into the 50 to really solidify the reversal of the price action. We haven't had that yet, so I don't want to get overly bullish, overly excited, but it does look like we could be seeing some turnaround for Bitcoin. Now, I do want to shout out Tech Dev. He pointed this out. So we have the rate of change of 1 year plus HODL waves, percent supplies last active. 1+ year ago. And you can see that we've only ever had this signal specifically flash 3 times in Bitcoin's history. It just flashed again. Now let's have a look at when we tend to get this signal on the chart. You can see right here, we got this first flash right down here between 2013 and 2012 and 2013. And although this wasn't the bottom of a bear market, we did in fact already have the big move to the downside, right? You see this little wick that we had right here, and it did signal that in that particular move, the bottom was in. If we come over here, you can see we had this move right at the beginning of 2015, right? We had this bear market bottom, and although the bottom happened back here, you can see that when we did get that signal, it did let us know that the bottom was in fact in. And right here, we had yet another one right here in 2019. You could see where this flashed, and right here at the 2018 bear market bottom, yeah, that's where it was right here when we had that dip. You could see that we already had that bottom, and of course, it was signaling that the bottom was already in. And this one right here may have potentially came a little bit prematurely, but the question is, does it mean that that was the bottom, right? This one came a little bit earlier than usual. Could have just been because of this sort of different rounded top to the market, but it is something to consider. Does this mean that the bottom is in fact in? So we've seen a lot of indicators that are essentially telling us that the bottom is in, but nevertheless, time will tell. However, I do want to point out that we have been on a nice, very nice bounce to the upside. You can see every single time we are in fact putting in higher low, higher low, higher low, higher high, higher high, higher high. This is very, very good for the structure of, any asset, which could potentially be telling us that we are looking for that reversal and that this was our capitulation candle, right? We saw a lot of liquidations. We saw a lot of bankruptcies, and, you guys know what's been going on with Voyager and Celsius, but ultimately right here, the level that we're really trying to break, guys, is pretty much $24,000 even. It's actually $24,040. And yes, we do technically have this upward sloping trend now. You can see where we do keep peaking out on these resistances. So take it with a grain of salt. Ultimately, we need to get above 24,000 even, but really 24,761 is that level. And if we do have a confirmed break above that $24,000 level, right? So maybe we do something like this. We come up, we hit some resistance here at the upward spider line, we come down, and then as soon as we reclaim, hopefully, obviously if we don't, then don't take the trade, but if we do have a bounce off of this $24,000 area, turning that resistance back into support, then I do believe that the next level is 25,815 being this bottom of the blue zone, and ultimately I think the next level could be touching the bottom of this wick right here at around 26,621. Now at that point, we would have to obviously reassess ourselves. If I had to just take a look right here, I would say potentially, we would find somewhere in this next level between 28,000 to 30,000, but let's take it a day at a time, guys. But remember, if you do want to trade this, check out my tutorial that I have on BitGet. I personally think it's the best on the internet, and they are US friendly, and they do have 20 Bitcoin daily withdrawals, and they just released a recent statement about an insurance fund that they're actually having as well to help cover in the event of these crazy things that do happen. So if you haven't checked it out, get a account over there. And if you guys want those extra bonuses, you can get 4,000 on the website. You can get an extra 2,725 if you use the link below in the description. So make sure you check out that tutorial popping up above, and make sure you use the link if you are looking to trade. Obviously, I don't recommend it for beginners, but I do go over everything from beginner to expert, and you can do spot trading as well with reduced fees if you use the token. So I just want to talk about something today super quick that is a little bit weird, and then we're going to move on. The weird thing to me is that we're actually seeing a little bit of consolidation in the stock market, but we were seeing earlier today the S&P was pumping, and we also have the DXY pumping as well, which is kind of weird, right? Now, we talked about this parabolic trend being lost. Now, if we do, in fact, break back above into this parabolic trend, then this right here could have actually ended up being a bit of a fake out for the DXY. However, I don't think that's the case. We did anticipate the bounce off this support, but I do think that inevitably the dollar is going to fall, at least for the next few months. So obviously, as I said, some people in the comments calling me a moon boy. Guys, long term, I'm a moon boy when it comes to Bitcoin. Short term, though, let's be real. Let's be honest with ourselves. Downtrend on the macro, lower low on the macro, lower high on the macro. This is a downtrend. We are in a bear market, right? But you can see right here that we are having consolidation at a very critical level where we did have it back here way, way, way back in December of 2020. Now, if we can, by chance, break through that crazy wick that I talked about right around to 25, 26,000, depending on which exchange you're looking at, then ultimately, yes, we are going to come up here to around that $29,000 level. And the big thing that we need to pay attention to is breaking this downward sloping trend, because every single time in Bitcoin's history that we've ever been in a bear market, what really was the ultimate move to get us out was breaking out of this trend, coming back and retesting it, and then continued. Now, we are nowhere near that, but what we can see from, history is that these levels are prime levels for Bitcoin accumulation. It's not the fun time. It's not the exciting time. It's not the time when everything's going to 100x and we're all just throwing darts at the board and making tons of money, but it is the time to accumulate and get into a position for when we eventually inevitably do have that crazy rally, which will come sooner or later, whether it be the end of this year, beginning of next year. I've been doing this for over 6 years now, and I can tell you that, when it's boring, it's boring. But man, when it is exciting, there's nothing like it. And that's why to this day, I still talk and do crypto, because crypto to me is just way more fun, honestly, than stocks and all that other stuff. But traditionally, having a look at what Bitcoin is doing right now, when you do have these higher lows, higher highs, it is very bullish activity. And on the futures, we do still have the CME futures gap up here, which we know always gets closed, which is why I also say that at some point, inevitably, maybe within the next month or 2 months, like we said, we are going to have that 28,000, maybe even touch 30,000. Now, 30,000 is going to be very, very big for Bitcoin. We consolidated there for about a year and a half. So that is going to be a very, very difficult level for us to break because of just how long we spent there. But nevertheless, even from this point, if we were to get back up to that level, you're still talking potentially around, another 30% move for Bitcoin. So very, very good in the short term. Also, just wanted to point out, total crypto market cap does look like it is curving up right here, excluding Bitcoin and Ethereum. So that also confirms that we may be having that, sort of bottom movement. We also have Ethereum against the Bitcoin. This green line right here is the most historically important line for Ethereum versus Bitcoin. You can see all these times, like it held it down, held it down, held it down, held it down, and then boom, we broke above it. And then, of course, that became the support. Well, if we do break this level of consolidation right now, that could mean that Ethereum is getting ready for a just tremendous move. And as we know, Ethereum does tend to lead the altcoins. So we could be looking for a little bit of an alt season, maybe a potential alt season. We were keeping our eye on the dominance. And of course, the most important is this downward sloping trend on the total crypto cap, which, as you can see right here, we have found that support on the 200 weekly, but nevertheless, we are finding ourselves hitting a bit of resistance right here. So we need to break that resistance for the overall cap. But as I told you guys, Market Cipher did give us that indication. We did get the green dot, and we've only ever had 3 of these in history. And I mean, obviously, with the exception of this one, but remember I told you guys, we needed to have a certain circumstance, right? We needed to have the money in the red, the money flow in the red, the RSI had to be low, and we also had the VWAP curving up into positive, right? So this was a fake out right here, but this time we got all 4 of those. Boom, mark the absolute bottom. This one, we got all 4 of those. Boom, mark the absolute bottom. And again, we do have all 4 of them flashing again. So if you guys do, by the way, want to get Market Cipher, unfortunately, this is not a free indicator. A lot of the, almost every indicator that I use on this channel is totally free. You can literally just find it in the tool set of TradingView. But this one you do have to pay for. If you guys want to check it out though, you can use the link below if you want. It's up to you guys. You don't have to, but it's pretty good for beginners. I do like using Market Cipher. And, now if we do start confirming a bit of a mini uptrend, even in the next couple months, I think you can use this indicator. It's very good at catching trends, especially when you have that money flow, you have that direction. Actually, Market Cipher is something that I used pretty much all through, 2019, leading into 2020. And it was amazing for catching those bottoms and allowing us to, enter those longs all the way up. So if you guys are interested, check that out. I have it, I think, as MC Tools below. You guys can check that out. But getting back to Bitcoin and whether or not we truly have bottomed, you have Anthony Scaramucci. He's the founder and managing partner at Skybridge Capital, and he does believe that the worst part of the bear market is over. He voiced his opinion that it was possible for Bitcoin to decline, but he said, quote, "I don't think it's going below the low that we reached for this cycle, which is around 17,500. He said, "According to our fair market value metrics based on adoption, wallet size, use case, growth of wallets, etc., we think that the the fair market value for Bitcoin right now should be around $40,000. He also says, we believe that the leverage has been blown out of the system. Now, granted, there is still leverage in the system, and some of it is quite high right now. I do agree with him that some of these big players that were irresponsibly, using leverage definitely have been blown out of the system, right? We saw Celsius going bankrupt. We saw Voyager saying they may not be able to pay back, all of their clients, right? But so yeah, I mean that's just something to point out. Another thing to point out, and should we trust Bank of America? Well, I don't know, counter trade the news if you want, but they did conclude that the recent rise in crypto outflows from exchanges and a rise in stablecoin net inflows is signaling bullish momentum. The bank went as far to say that fading sell pressure has now turned to buying. The change in sentiment can also be seen in an 11% rise in Bitcoin between June 29th and 26th, despite a 56% downtrend year to date. They said, according to the report, investors are moving off the sidelines as risk assets rally. Tight supply and continuous exchange net outflows indicate the investors continue to hodl. And traditionally, when we do see Bitcoin being moved off of the exchanges, that does generally mean that they're putting it into cold storage, right? They're setting it and forgetting it. And when you see stable coins going into exchanges, usually signals that they're waiting to buy, right? I mean, unless they're putting it on there to get some APY or something, generally, that's what it means. So we are starting to see that right now. We are starting to see stablecoin inflows and crypto outflows, right? So the hodlers are holding the coins and they're getting rid of their dollars, right? So that is usually a bullish sign. Will it be different? Of course, there's always black swan possibilities, but nevertheless, that's what we're seeing. Also, super quick, just Michael Saylor stepping down as the CEO of MicroStrategy. He says he's doing this so that he can focus on Bitcoin more. So some people were saying he sold his Bitcoin. No, he didn't sell his Bitcoin. And he also said that their strategy remains the same. He went on to reiterate, ultimately, we acquire Bitcoin long term, and you even had Andrew Kang, the company's CFO, saying buy and hold for the long term. That is it. Also, in their Q2 reports, in case anyone was concerned, the company put its Bitcoin-related activities on the same pedestal as its core business analytics. They said, again, here at the company, we intend to acquire and hold Bitcoin long term. And currently, right now, the aggregate cost basis of their Bitcoin holdings is around $4 billion. So that's pretty incredible. So no, any fudge you guys are hearing on the internet, he's not selling, he's just stepping down. And he also said that they had this planned for years, and he had planned on pulling back a little bit, and he's still involved. He's not like leaving the company, he's just not going to be CEO. That's all. Everything else remains the same. At least that's what they're telling us. Now let's talk about why you need to be safe with your crypto. So Nomad's cross-chain bridge was drained of $190 million on Monday in what's been described as one of DeFi's most chaotic attacks to date. So what's crazy about this is while most DeFi exploits are typically carried out by skilled programmers, they say that this only required a relatively simple copy and paste exercise. So once this news got out, a bunch of other just regular people went and tried to steal funds from the bridge, resulting in what they call a frenzied free-for-all. So like I said, over 190 million worth of wrapped Bitcoin, Ethereum, USDC, and other assets were stolen, making this one of the biggest attacks on DeFi to date. So as I said, guys, DeFi is still the wild, wild west. You put something on a contract, you use this platform, you really don't know what's going on in the background unless you can audit code or read code, which I can't do that. I'm not a developer. I know nothing about reading smart contracts. So because I don't know anything about that, I put my I put my coins on my ledger and I just hold them in cold storage unless I'm trading. If I'm trading, then I'll keep some funds on exchanges. But if you're not actively trading or actively, I guess, receiving APY, but then again, if you are, it's still a risk. So you really shouldn't put more money on any of these lending or, APY, whatever things, then you're willing to lose, essentially. I mean, it's risk versus reward, but then you have things like this. And here's another thing that happened. And these were people that were keeping them on hot wallets for Solana. 7,767 wallets have been hit by hackers. They estimated more than 5 million in assets has been taken. And actually, I saw an update. It could have been upwards of 8 million. They said, while it's not confirmed what might be possible, Solana Labs co-founder said that the incident is likely a supply chain attack on wallets using Apple's iOS operating system. But the fact that exploited wallets didn't have prior interaction with dApps and had remained inactive for some time indicates that hackers may have extracted private keys from Solana's hot wallets, not with the usual phishing attacks carried out with malicious links. So these would be Solana hot wallets. They're saying this is specifically iOS, but is this is it a phantom issue? I don't know. But once again, guys, hot wallets, you are risking the possibility of someone being able to take it. Cold wallets, these are where you put the funds for safe. It is not connected to the internet, right? No, there's no connection. This is the key. They're on the blockchain safely. So if you guys want to buy some of these Ledger Nano wallets, check out the link below. And also, I have a tutorial on Ledger Nano X if you guys haven't seen it. It's basically the same for the S and the X, S Plus, whatever. It's basically the same thing. If you guys want to learn how to use it, I do go over that beginner to, expert, whatever, the whole thing, if you guys want to know how to use it. If you're scared, some people are scared to put their money on these things. I was scared the first time, but I've safely had my funds, on my ledgers for years now. No issues, no problems. I sleep very sound like a baby at night. So please be safe out there, guys. But speaking of that, if you are looking to trade, I actually wanted to mention that BitGet actually just made a $200 million investor protection fund. So they say while the ultimate goal to regain investor confidence is to regain investor confidence amid a prolonged bear market, BitGet has launched a $200 million fund to safeguard users' assets comprised of 6,000 Bitcoin and 80 million Tether. They chose to self-fund the entire protection fund without relying on a third party, and they have the managing director saying the protection fund will help us mitigate investors' concerns and attract potential users as we continue to endure the crypto winter. It is crucial that our users can rest assured that their funds are kept safe. So once again, guys, this is why I use BitGet. This is why I've been trading on BitGet recently. And once again, guys, if you want to watch my tutorial, just not to brag, I think it's the best on the internet. I took a lot of time. It's 45 minutes, so check that out. Obviously, links below, popping up again. You guys know the drill. And I wanted to ask one question before we go. This is sort of just an opinion, just curious. I just want to know what you guys think. So I saw this article that said KuCoin ETFs are now going to allow NFT purchases with USDT instead of ETH. They say the new product will help over 20 million KuCoin users to access blue chip non-fungible tokens through direct purchase with Tether instead of Ethereum or ETH. So my question is, and it's probably not going to really affect much, but a lot of the demand for Ethereum, we saw the Ethereum price absolutely skyrocket, was that people were using the Ethereum to purchase the NFTs, and the NFT craze was, absolutely insane, right? A few months ago, several months ago. So my question is, if now you don't need the Ethereum, you're going to be doing it with USDT, does that decrease the need for ETH? I mean, technically, you still need ETH for gas, right? Now, this is obviously being done through a centralized exchange, so you wouldn't really need gas either way because it's all essentially just an IOU on paper. But I do wonder, and I am curious what you guys think about this. Probably will have no effect, but just wanted to hear your opinion on that. But that is it for me today, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. I do believe we're going to have some exciting times ahead. So make sure that you get subscribed. Make sure that you turn on that bell notification because some of these videos are in fact time sensitive. And of course, if you want to learn how to trade, I do think there's going to be a lot of opportunities in the up and coming months. Make sure that you check this out, popping up right here, right now. Until next time, stay crypto. And of course, peace out.